Hi everyone, welcome to the Decent Trader Sessions. I'm Philip Swift. Thanks for joining. Now, every week we share a market cycle or on-chain indicator on this channel, and we show you how it's useful for your Bitcoin investing and trading. Now, if it's the first time you're here, hit the subscribe button and turn on the notifications so you don't miss any future videos. And please also hit the like button, as that's really helping us to grow the channel. So thank you for doing that. I do appreciate it. Nothing I say is financial advice in these videos. It's for educational purposes only. All right then, so today I'm going to be sharing a really useful on-chain indicator that forms a key part of my personal trading toolkit for swing trades and for Bitcoin investment allocation. So I do use it amongst a bunch of other tools, and I've actually been using it recently in the past few months, and I'll show you how in a little while. So this indicator is called Spent Output Profit Ratio, or SOPR for short, SOPR. And I first want to give a shout out to the Glassnode team because it's their indicator. They created it. It was one of the team, Renato Shirakashi, who first came up with this back in April last year. And it's a really smart indicator. It is available on Glassnode, so you can go and check it out there as well. Today I'm going to be using our version of the indicator because I think it's a nice, easy way to see the key levels, and we are using Glassnode data, so we're pulling Glassnode data into our chart here. So spent output profit ratio looks at whether Bitcoins being sold are in a profit or a loss, okay? And it uses on-chain analysis to look at the difference between the price paid and the price sold for Bitcoins entering and leaving wallets. So that's all you really need to know about how this indicator works. From a technical perspective, we talk about it in terms of looking at spent outputs in dollar terms relative to values at creation in dollar terms. So technically, we are dividing the realized value of spent output by the value of creation. But we don't really need to understand that too much to use the indicator. Really, all we need to think about is, are people in a profit or a loss when they're selling their Bitcoin today? Okay, so that's the kind of simple way to think about it. That's all we really need to think about. And from there, we can understand why the indicator is doing certain things. So how that manifests itself in terms of the chart itself, what we need to know is whether spent output profit ratio, or SOPR, is positive, which is red on the chart, or whether it is negative, which is green on the chart. When it's positive, that means on average people are selling at a profit. Yeah, so the price sold is greater than the price they paid. If it's negative, then it's the reverse of that, so they're selling at a loss. Okay, so that's kind of the principles, and that's what shows up on the chart. Okay, so we're looking at whether SOPR is in red or whether it is green on this particular version of the chart. So why is that so useful? Because this indicator is really useful. It's one of my favorite on-chain indicators to use, and I'm going to show you how it is so useful. So the first thing you need to do is to determine whether we are in a bull market, like you can see here on the chart from 2016, 2018, or whether we are in a bear market, obviously from 2018 into 2019. Now, there's lots of other tools and indicators that can help determine that. If you just head over to the live charts section of Decent Trader, or watch some of the videos in this channel, you'll see a whole bunch of indicators that help us understand whether we are in a bull market. And now, right now, we are in a confirmed bull market. So I'm going to use, first of all, 2016-17 bull market as a nice, clean example. And because we obviously all understand now, looking back in time, that definitely was a bull market. So on the chart here, you've got price, which is the white line. And then we have the indicator where we're looking for dips into the green. Okay, so when this indicator flashes green, that's what we're looking for. And the reason why we're looking for that is because it means that people are selling at a loss in the short term in a bull run. Okay, and when that happens on this indicator, that has been proven to be a fantastic buy the dip opportunity. Yeah, so if we look here at last cycle in 2016-17, whenever this indicator went green, and so therefore telling us that people were selling at a loss, if we look at the big time frames, we can actually see that that was often a really good buy the dip opportunity. So you can see we were getting bounces here. So if we'd have allocated capital here, that was in this level here when price was around $360. And then price obviously then rallied up. And we can see some small little dots here when it was saying, okay, we've bottomed here, we're not going to go much lower, price will keep going up. And then again here you can see we had this particular dip here from $760, $770 down to under 600, and we got the indicator flashing green there, and then we bounced from there. We then had another final leg down. Again, the indicator flashed green when we went down to $520 odd. And then from there on, we just rallied until the next time the indicator flashed green, which was when obviously we were pulling back here in early 2017. Price then rallied as the indicator flashed red. And then again, we can see when we had these pullbacks in March 2017, again, the indicator went green. And then again, later on in the cycle, I'm just going to move the price line so we can see it more clearly. But you can see these dips here and here when price, you can see it got this capitulation down in July under $2,000 before we then really rallied hard. And then again, that dip to $3,000 before then we didn't look back. And then the indicator you can see here, interestingly, didn't flash green again until we'd actually entered the bear market. So for the rest of the bull cycle, we were in profit and the indicator just stayed red. So really, really good tool for understanding when to buy the dip in the previous cycle. And why does this happen? Well, it's really down to market psychology. So people do not like selling at a loss. That is a proven psychological fact. People like to hold on to their losses until they hopefully realize a gain. And so what happens in a bull market when we see that phenomenon is that people are restricting supply because they're not prepared to sell at a loss en masse. So this further restricts the supply, puts more pressure on the price, and then price begins to rise. So another way to look at it is that even if price pulls back in the short term, people are not prepared to start selling their Bitcoin at a loss en masse, as they are expecting higher prices in the medium term. And that herd mentality in a bull run is reflexive, and it restricts supply, which pushes price further up. So has it been effective recently? Well, yes, it has. If we just zoom in on recent price action, so if we have a look here after the March COVID crash, we can see when price was struggling to break above $10,000, we had the indicator turning green saying, look, this is about as low as price is going to go here, when we were sitting at around $9,000. And then we obviously popped up to $12,000 in August. And then we had that drop down to the 10K level. And this was where decent trader subscribers will know I was saying this is a fantastic buy the dip opportunity because this indicator was turning green. I was saying, look, you've got a couple of chances here to get long for the long term as this indicator pulled back to the 10K levels. And then obviously we haven't looked back since, and the indicator has been in profit since then. So it continues to be a very effective tool for buying the dip. Now, obviously, I'd never recommend that you use this indicator in isolation. But when you use it alongside other tools and indicators, as I was doing here back in September, it can be a very, very effective tool for either broad investment allocation or for large swing trading. So that's it in terms of how the indicator works and what to look out for using this indicator. You're looking for those pullbacks into the green areas when we're in a confirmed bull market. The inverse is true in a bear market, but it doesn't tend to be as sensitive in bear markets. So just be a bit cautious when trying to use the reverse of that in a bear market. I also just want to mention very quickly, I have seen Some people try and use this as a topping indicator when we are in a bull market, and I myself try to use it as well. Sorry, I don't want to show you that. That's my MetaMask wallet. If we look here, you can see around 0.03. If I just draw this rough line across here, that's around 0.03 on the indicator, and you can see a couple of times, like here, that caught the top, and a couple of other instances as well. You can see when it goes quite high towards those levels, then it tends to top out, price tends to top out and pull back. I would be a bit nervous about using that because it's not how the indicator is meant to be used, and actually what you can see, as we saw in 2017, we can stay above that 0.3 level for quite a long time and price can still rally higher. So just be wary of that. I have seen some people try and use it that way. I would be a little bit cautious. It can show you that the market's getting a bit overheated, but the market can continue to run without you if you're just using this indicator in that way. All right, guys, that's it for this week. If you want to have more analysis like this or use more tools like this, then head over to decenttrader.com. We do have a Black Friday deal on at the moment, 30% off a lot of the packages. So go and check that out before it runs out. And I hope you found this useful. If you do, hit the like button. Nice one. I will speak to you soon. Thanks.